Okay, let's talk about what's been happening in the financial world, because it is wild. The price of gold didn't just climb, it absolutely exploded. So in this explainer, we're going to break down exactly what's behind this insane surge, who's driving it, and, what it might mean for the rest of us. First off, let's just get the numbers on the table to see the sheer scale of this thing. On October 14th, 2025, the price of gold peaked at a jaw-dropping $4,109 an ounce. I mean, for an asset that's supposed to be the slow and steady tortoise, this kind of move is, well, it's pretty much unheard of. And to really wrap your head around that number, get this. We're talking about a 1,447% surge since just last year. This isn't some gradual, healthy climb. No, this is a vertical rocket launch. And a move that big demands a really good explanation. Which brings us right to the big question, doesn't it? Is this just a temporary, speculative bubble that's about to pop? Or are we watching a fundamental, long-term shift in the entire global financial system? To figure that out, we've got to follow the money and see who's doing all the buying. All right, first up, let's dive into this global gold rush. We are going to follow the money trail and pinpoint the major players who are behind this incredible demand. Let's see who's been stacking up all that bullion. And this quote, man, it really cuts to the heart of it. Analysts are basically screaming that a move this big is not just random market noise. It's a deliberate signal, a strategic play on the global chessboard. And a lot of those signals are coming from major powers like China. So who are these big buyers? Well, for starters, we're talking about central banks. In 2025, Poland actually led the pack, buying up an impressive 49 tons. And right on their heels was the People's Bank of China, grabbing 36 tons for their vaults. These aren't small-time purchases. These are massive, national-level strategic buys. And when you zoom out and look at the whole picture, the grand total for central bank buying in 2025 comes to this: 290 tons. This isn't just a couple of countries hedging their bets. This is a coordinated, worldwide movement by governments to beef up their gold reserves. But here's the kicker. It's not just governments. In the month of September alone, a net 120 tons flowed into gold ETFs. That means regular folks, institutional investors, big funds, they're all piling into gold too, doing the exact same thing as the central banks. The demand is literally coming from every direction. Okay, so we know who's buying, but the billion-dollar question, or maybe trillion-dollar question, is why now? What's going on? And that brings us to this climate of uncertainty that's gripping the globe. Let's be honest. The world feels like it's on edge. And these are some of the big reasons why. You've got rising tensions between the US and China. You've got these stubborn trade disputes that won't go away. And then you have domestic instability, like the US government shutdown. All of this just erodes confidence. And when uncertainty spikes, investors have always run to one thing for safety: gold. It's the ultimate safe haven asset. And at the very same time, you've got this huge shift happening in monetary policy. The U.S. Federal Reserve is cutting interest rates, which pushes real yields down to almost zero. In plain English, that means the money you have parked in safe bonds is barely growing at all. The direct result of that? A weaker U.S. dollar, which ironically makes gold cheaper for everyone else in the world to buy, adding even more fuel to the fire. All of these forces are feeding into this massive trend called de-dollarization. For decades, since World War II, the US dollar has been the undisputed king of global finance. Well, what we're seeing now is a deliberate, strategic effort by countries all over the world to become less dependent on it. And what are they replacing those dollars with? Well, as we've just seen, a huge part of the answer is physical gold. So we've got a handle on the why, but what about what's next? In this next part, let's take a look at where gold might be headed as this whole de-dollarization trend keeps playing out. Here's the journey in a nutshell. We see the baseline back in 2024, then that dramatic surge we just talked about, and then a projection for the future. And what's interesting is that most analysts don't think this is the peak. They're forecasting that gold could climb as high as $4,900 an ounce by 2026. So why do they think this bull run isn't over? Well, it boils down to three main reasons. First, there's just a growing distrust in traditional government-backed currencies. Second, the global supply of gold is limited. You can't just print more of it, and it's getting harder and harder to mine.
And third, that massive de-dollarization trend we mentioned, it isn't just continuing, it's actually picking up speed.
Which brings us to our final, and maybe the most important question of all. What does this enormous global shift actually mean for you, for the individual investor, for your money?
This quote right here just nails the massive shift in thinking we're seeing. For decades, investors thought of gold as just a hedge, right? It was like an insurance policy against disaster. But now, its role is fundamentally changing. Not just nations, but individuals too are starting to treat it as a core strategic asset, something that's essential for preserving wealth over the long haul. So, what can you actually do with all this information? Well, experts seem to be pointing to three key things to think about. First, it might be a good time to just reevaluate your portfolio and see how it's allocated. Second, you have to decide what kind of gold exposure even makes sense for you. Do you want physical bars, or is a more liquid ETF a better fit? And third, given how much the price has jumped around, being really strategic about when you might buy is absolutely crucial.
And that really leaves us with one final, pretty provocative question. For generations, we've all heard the mantra, cash is king. But in a world where central banks are printing trillions and entire countries are actively moving away from the dollar, this historic gold surge forces every single one of us to ask, is that still true?